This is the Ellis Martin Report. Join Ellis now for a conversation with Ali Haji, the CEO of Ion Energy, trading in the U.S. on the OTC as IONGF and on the TSX Venture Exchange as ION. Ion Energy is committed to exploring and developing Mongolia's lithium salars, which includes the Babaol and Urgakh Naran Project. Ion's flagship 81,000-hectare Babaol Lithium Brine Project represents the largest and first lithium brine exploration license awarded in Mongolia. Ion Energy is well poised to be a key player in the clean energy revolution, positioned well to service the world's increased demand for lithium.
Ali, welcome back to the program.
It's a pleasure to be here.
I wanted to specifically discuss the importance of Mongolia and potential lithium production. Why is it so strategically important? You as a Canadian, why have you looked toward Mongolia as a place to do business?
Well, Mongolia for us as a group, I've been involved with a group that's been doing business in Mongolia for the last 12 years. And when I visited Mongolia on the back of an acquisition of a gold asset from Centerra Gold, ATO, that being now Step Gold, traded on the TSX under ticker STGO. When I was out there alongside my chairman, we looked at Mongolia in terms of its geological structure. We found that it was within an endoheric basin, which is indicative of lithium. And on the back of that data, we went back to the ministry. We looked at what data they may have had, what testing they may have had. And the Russians did some drilling in the 50s. The Mongolians and the Russians did some drilling in the 90s. And more importantly, in 2016, the University of Science and Technology drilled in that exact region to find anomalies of up to 811 ppm. And so we approached the government to set up Ion Energy. I'm a co-founder of the company, chief executive and director, and co-founded the company on the back of the prospect of finding lithium in country. And so we approached the government and said, let's put up a license for tender. They ultimately did. We were awarded it out of 5 parties that went after it. And that was Babaol, our flagship license. So Mongolia to us, given its proximity to China being the largest consumer of lithium on the planet today, just made sense to build a company that was a lithium explorer that would allow us to essentially fuel the largest consumer on the planet. And that's how Ion Energy was born.
So nobody had really touched the project. They'd taken a look at it. The Russians had looked at it and a few other entities had a close look at it, but nothing was done with this potentially huge lithium brine area. And you've got it because you were doing business as Step Gold at the time, correct?
That's correct. So we looked at the area based on the endoheric nature of the geology. We looked at Babaol. Babaol was our flagship. We went public on that asset. We found anomalies, as I mentioned, 1,502 ppm called the White Wolf prospect. We announced in December 2021. And then we acquired, rather prior to that, we acquired a license called Urgakh Naran. And Urgakh Naran is an endoheric basin in Dorngovi province, very similar to what you would find in the Atacama. Myself and my technical team, including Dr. Mark King, who was the qualified person at Lithium when that exited Zijin for $960 million back in Q4 of last year, was alongside myself as well as Don Haynes. Don Haynes is an individual that's industry recognized as an expert in lithium, not only hard rock, but also brine. So we went out there, we saw the exploration program take place. We kickstarted a TEM program on our Urgakh Naran, very recently acquired asset, now controlled 110,000 hectares. And that's important to us because, Ellis, if you look at the rest of the world, where does lithium lie? In LATAM, in Australia. Where is the expertise? In LATAM, in Australia. As first movers in Mongolia, we were the very first individuals to look for lithium in Mongolia. So would we spend shareholder dollars on a program that wasn't vetted by industry experts? Absolutely not. So we slow rolled our exploration program. In August 2020, we went public. We went public on the remit that this geology is very similar to what you might find elsewhere. And so on the back of that, we had an exploration program that allowed us to slow roll and literally scratch the surface of Babaol. Once we were done that, and we acquired Urgakh Naran, and the global sort of travel market opened up again, and we were able to go wherever we needed with the experts we needed. But the important aspect here is that we reserved and preserved shareholder capital on the basis of geology to understand where lithium may lie. When we had access to country, we took the foremost industry experts to that country. And the exploration programs we've conducted alongside the TEM programs and now the drilling programs and surface sampling programs show us that Urgakh Naran is indeed what could be considered a world-class asset.
You've got some highly encouraging geophysical results from the Urgakh Naran Lithium Brine Project that just came out about a week ago or so. Let's talk about that.
Yes, extremely important. I think when you look at brine projects around the world, on average, if you were dealing with a seasoned hydrogeologist or one that understood aquifers, they would continually tell you to look for this sort of magical number. That magical number is 0.5 ohm. We did 8 lines across 92 kilometers on the asset, and our readings were at 0.2 ohm on every line. We've now seen a very specific hydrogeological structure that exists below surface. And that's important for our listeners because, as I mentioned, 0.5 ohm is generally the cutoff. 0.2 being seen on every single line that we've done across this asset that is now an 18,000 hectare basin. It's very important for us, our listeners, our viewers, and those that are seasoned in the battery metal space.
How are your projects more competitive than, let's say, South America, Chile, Argentina, or even the Clayton Valley?
Fantastic question. I think one must consider the fact that we are a mere kilometer or kilometers, if you will, from the Chinese border. The Qinghai brines in China consist of clay-laden evaporites that are ultimately being brought to production. And these assets are being brought to production on the basis of the fact that labor is quite cheap, and the largest consumer on the planet, as I mentioned before, is China. China consumes 53% of the world's lithium, produces 73% of the world's batteries, if not 80%, and that number is yet to be determined. And our proximity to that market, where Clayton Valley, for instance, is in a region where you have a number of US enterprises, and, not to fault any of them, but they are quite talented and they have the best minds on the planet, have yet to bring these assets to production. Whereas you find in Asia, a number of individual companies, a number of individual entrepreneurs have found the ability to extract lithium to bring these assets to production where you have a clay content. Now, Bavayol, being clay derivative or evaporite derivative, is one that continues to be one that us as a company needs to explore and advance and understand further. Urgakh Naran, on the other hand, being a brine asset with low potassium, magnesium, sodium, calcium, and boron ratios, is an asset with an aquifer that could rival, potentially, things that we see across the globe. So, call it neolithium, so to speak. Should we say that? Should we not? It's an asset that is about a 17,000 hectare basin. We have a 19,000 hectare basin with surface samples of 918 milligrams per liter. Our impurities in that same remit are significantly lower. So what you have the potential to do here is build a DLE plant. And the northern Chinese province of Outer Mongolia or Inner Mongolia, depending on which way the sun rises, has the ability and the technology to essentially bring these assets to production. So our view is that we have always gone out to market to acquire lithium-bearing licenses in Mongolia. On the back of that promise, we will look to define a resource and ultimately bring in a strategic partner that will allow us to exit. You mentioned, Ellis, at the onset about the Koreans, the Japanese, and everybody else in that region. You look at the Koreans with Samsung, massive behemoth that builds a number of different technological aspects, and Panasonic in Japan, Sony as well. Sony was one of the first companies to build the NMC battery. So batteries that existed within rechargeable phones and what have you. And then you have Panasonic. And Panasonic today supplies Tesla with the vast majority of the batteries that they need that are not LFP. Lithium ferrophosphate. Lithium ferrophosphate, the technology in itself, is one that exists primarily in the gigafactories that exist in Asia. Now, one would consider that might be an Asian-centric market, but think of it this way. Scandinavia is now importing Model Ys from Tesla that are manufactured in China. Those are LFP batteries. They're being consumed in Scandinavia as LFP batteries. LFP batteries are lithium ferrophosphate. They don't use nickel. They use a fair bit of nickel, but they don't use cobalt at all. So we're moving away from the vast majority of the contentious metals that are being mined for the clean, green energy revolution.
You think we're moving away from nickel and cobalt?
Nickel, not so much, but cobalt, absolutely. I think, the world has looked at where the cobalt deposits exist, and cobalt can be quite contentious as a result of not only the environmental impact, but also the social impact. If you look at the Congo, for instance, you have a number of artisanal miners that could be, 3-4 years old, all the way up to 76 years old, pulling out the cobalt and causing areas of global conflict, if you will. So cobalt is something, in my view, that might be going away. Yes, LFP batteries have a bit of a disadvantage when it comes to colder climate, but we are working on ways to insulate that issue, literally speaking, and thus allowing those batteries to operate.
Well, it's such a huge market as China and then South Korea and Indonesia, Malaysia, Japan. Let's talk about mine life with all the land that you have.
Mine life is an interesting question. We are still early days, and you have to consider that, Indonesia, for the vast majority of this sort of electric revolution, pollution stance. They've been involved as a result of BYD investing heavily to build a battery manufacturing facility in that country. Korea, as we know, in terms of Samsung, LG, and Hyundai, Kia, and all the brands that you've heard about on this side of the world or otherwise, they continue to be pioneers. I think we'd be hard pressed to find individuals that don't have a Samsung television in their household. And what this tells you is that these individuals have pioneered that technology. Genesis, Hyundai, Tiger Woods. Tiger Woods drives a Genesis. Why does he do so? Because it's at the forefront of that technology. It's an electric vehicle that allows him the ability to do what he needs to do, but also live in a sort of semblance of luxury. You have to consider beyond that Panasonic, as I've mentioned over the course of this interview, has continually supplied Tesla with their cells required for those EVs. So that region of the world, Korea, Japan. Korea has built highways in Mongolia. Japan has built the airport in Mongolia, or some of the major airports in Mongolia. So this is a relationship that is very strong. In Mongolia, nationally, being bordered by Russia and China, has asked themselves, or they have now instituted a policy that's called the third neighbor policy. So the Mongolian government would much rather you do business with anybody outside of Russia and China. And that allows us as a company to ensure that we have the ability to build strategic relationships with those outside of those two neighboring countries. So we're quite excited on the back of that. And I will reiterate, Ellis, that the fact that we are fully funded in this market that is not very exciting for those that are looking to raise equity puts us in a position today that rivals most, in my opinion, and allows us to execute and perhaps weather the storm of this turbulence that we're seeing in the market today.
Is it too early for you to entertain conversations with end users, or are you a year away from that? At what point do you move forward in that arena?
I wouldn't call it too early. I think we've had sufficient interest from strategics thus far. I think we have in Asia, in particular, about 13 strategics that have NDAs with us that are now in the data room. We have one European strategic and we have 2 LATAM strategics in our data room. And of course, the fact that we are fully funded, as we've just discussed, our goal today is to bring in those right strategic partners that allow us to advance our projects that ultimately brings them to production. So we're not looking for an equity injection because we don't require that. Should we receive that to give us the validation on the back of our exploration results and the data that we've collected thus far that tells us that we have something that is quite significant, that's the validation we require. And we'd allow those strategics to have a ROFR to ultimately reinvest or acquire our organization in its entirety.
So this is not one of these flavor of the month, flavor of the year, flavor of the season lithium plays that we would have seen 2 or 3 years ago. It's a real project. You actually really care about your shareholders. It's not some sort of lifestyle company. You are very successful with your sister company producing gold mine with STEP. You have real plans for this company, and you're very, very careful with how you spend money and dilution.
I couldn't agree more, Ellis, and thank you for pointing that out. I mean, you look at us as a sort of consortium, Step Gold being one of those companies, Ion Energy. We continue to invest our own capital. So as management and insiders at Ion Energy, we control 25% of the company. We've invested our own dollars at every raise, at every price over the course of the history of the company. I co-founded the company. I'm not in here to make a quick buck. I'm here to see my vision through, as are my board, my management team, and everybody else that's associated with the insiders. And we're now seeing, an ability for us on the back of our strong technical expertise to understand that this is a region that we could see potential value in, and we will continue to execute, but we will never, and I say this unequivocally, we will never accept $1 from an investment council or consortium that is less than our last raise.
So no cheap money for Ion Energy.
Absolutely not.
Fantastic. Let's talk about the share structure of the company.
We have 60 million shares outstanding today, 25 million in the hands of management and insiders. We have about 8 to 9% in the hands of Mongolian investors that have physically put in money into the company. Beyond that, another 8% with family offices, Zurich, London, New York. We have funds that are involved with the company as well. We have Delbrook Capital out of Vancouver. They own close to 4% of the company. We have US Global, Ralph Aldis and the team out there. We have Steve Palmer, so Alpha North Asset Management. We have Greg Schofield out of Spartan Funds. Ellis. We have a number of other institutional holders. So none of these institutional holders have sold or even looked to sell since we've dipped below going public price. And that happened around PDAC when, of course, what we're seeing today in the commodities market has occurred. So not a single institutional holder or an insider has looked to sell since this sort of downturn has happened. And one thing that I will say with pride, Ellis, is the fact that I went public in August 2020. I did not dip below my IPO price until PDAC of this year, when the market started to turn. 22 months of trading above go public price, I think, in my view, is something that might be considered commendable.
And I've been taking a look at your chart lately, and overall, I don't think you see that kind of dangerous selling volatility that we've seen across the space. ION looks fairly safe, and this is me saying it as a journalist. I'm no expert, but it hasn't received much of the pain that we've seen across the sector, and that's encouraging, even in recent weeks.
Thank you for that. I agree with you. I think we are faring well relative to our peers. Our story is new. That being said, we're in a strong position given we are fully funded. And that's what our listeners and everybody else has to take back. We're funded. We're a team that's strong. We're a team that can execute. We've had exits, not only in the coal space, gold space, and multiple other spaces, including copper. So stay tuned, and thank you for listening.
Ali, it's been a great pleasure having you on the program today. Thank you so much for joining us.
Thank you, Ellis.
Ellis has been speaking with Ali Haji, CEO of ION Energy, trading in the U.S. on the OTC as IONGF and on the TSX Venture Exchange as ION. Learn more. Head to the company's website, ionenergy.ca. That's ionenergy.ca. This is the Ellis Martin Report.